Welcome to CamelbackTrading.org. This is the review of May 19th, 2026. Using our proprietary Camelback TradingView market profile, let's review today's price action and look at what is ahead for tomorrow. We saw another deeply fascinating session that highlighted the continuous push and pull between short-term traders and the bigger macro picture. Sellers held firm control during the first half of the day, successfully testing lower, taking out the previous week's low, and pushing the weekly timeframe back into balance. However, by midday, the entire dynamic shifted. The market launched into a steady upward grind that eventually took out the initial balance high on both indices. ES had already taken the IB low earlier in the session. Looking closely at that midday stretch, the price action took on the distinct characteristics of a short covering rally. If you remove periods A, B, and C, the market carved out a classic P-shaped profile. This market structure communicated two critical nuances. First, strong, longer-term sellers were completely absent from the field, with short-term traders simply taking quick profits on the recent downward leg. Second, it raised the probability of a late-day liquidation event. That expected liquidation arrived during the final periods of the session. The Nasdaq executed the liquidation beautifully, raising its point of control and spending the majority of its time trading above half-back. The S&P was a much messier affair, lowering its point of control late in the day and dragging the liquidation right back toward the lower end of the range near the value area low. Looking at the bigger picture on our higher timeframe chart, today marked a significant structural shift. This is the first time after 6 consecutive weeks of upward weekly value progression that the market is moving value to overlapping to lower. If buyers can successfully shake out weak hands, relieve larger timeframe pressure, and revert this back to an unchanged or overlapping to higher state by Friday, the macro context remains highly favorable for the bulls. But because the weekly remains a developing balance, the daily short-term participants are the ones pulling the levers for now. Looking ahead to tomorrow's session, the game plan is straightforward. If the bears want to maintain control, they must secure acceptance below today's value area low. Opening the market below today's value gives them an immediate lead, providing clear access to today's low and several deeper downside targets, including a critical prior daily low, a major structural gap, and a previous wide overnight point of control. For the buyers to wrestle back momentum, they must find acceptance back above today's value area high. Their ultimate objective is to take out today's high to shift the daily trend back into balance. For the S&P, keep a very close eye on yesterday's wide point of control, which acted as heavy resistance throughout the midday rally. For the Nasdaq, the hardest task won't just be taking today's high, but navigating the immediate resistance right above it, where single prints mark the lower end of Monday's upper distribution. If the market opens inside today's value area tomorrow morning, expect highly choppy and indecisive price action. There is absolutely nothing to lean on inside value, and chasing moves will be dangerous. Exercise extreme patience and discipline. Do not start the session with a directional bias, and let the market profile and the market-generated information guide your setups. Remember, if you are going to buy an account with Tradeify, use code CB2724 and help us donate to St. Jude's Hospital 20% this time. Also, don't forget you can get this education daily inside the Camelback Trading Room, including our daily webinar and our custom market profile for TradingView. Join us at CamelbackTrading.org. Be safe and trade well. Welcome.